Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and all the investment markets so you can better your portfolio. Our global tactical opportunity portfolio across the board, not only our balanced income model, our balanced in growth and also aggressive growth, are doing exceptionally well again this year. And we are completely ecstatic, not only obviously with the performance that we're seeing, but obviously that benefits you, the client. We love to see our clients always do well, and we always know there'll be little bumps along the way, but if we follow our disciplined strategy, we truly believe that you will continue to be well rewarded like you have in the past. We continue to see improving data sets around the world. There's a little bit of fear about China slowing down, which I've talked about before. Maybe a possible hard landing where their GDP growth goes from 9.5% maybe to 5 or 6. I think either way, China is going to be a formidable opponent in the world GDP growth overall. They have plenty of ammunition in their arsenal, not only in monetary but interest rates and so on, in order to stimulate the economy if they need to. And if we look at the U.S., it's getting a little bit better. I continue to see improvement not only in the unemployment numbers, not to the pace people would like to see, but they're getting better. I continue to call this my stealth rally. We're seeing new highs for the S&P this year. We're seeing many of our fixed income assets, other than just bonds, doing exceptionally well. So for those of you obviously who are clients are being well rewarded, and those of you who are not clients, hopefully you are positioning your portfolio correctly. I truly believe that we will continue to see improvements in the U.S. economy this year, and I truly believe that the stealth rally that we're seeing is catching a lot of non-clients off guard. I continue to interview new potential clients at Resney Wealth Management and talk to people on my radio shows all the time who are still doing the wrong things with their money, and namely not having an investment strategy or maybe using a broker who's not really giving any advice at all. And unfortunately, and today, as I always tell my clients, if you don't have an investment strategy and you don't follow it, you are really setting yourself up for mediocre results and substantial risk in your portfolio. Every investor and every portfolio needs to follow a disciplined strategy, and that's why we do what we do every day. We're going to make changes to our global tactical opportunity portfolio for our clients when needed and when necessary. Buy and hold, as I've always told clients, is not an investment strategy, and in my opinion, it's a recipe for disaster. And fortunately for our clients, we are following exactly what our portfolio is dictating we need to do. And again, it's rewarding you, the client. As we continue through part of this year, we've had the Fed testimony that has come out just a couple days ago. And yesterday, the bank stress tests were actually released early because JP Morgan Chase basically decided to raise or increase their dividend. The stress test came in across the board. Some banks made it and some banks didn't. And I think at the end of the day, folks, what you have to realize is these stress tests are really to help basically give a better foundation to the U.S. economy. If the banks pass a stress test, it means they have adequate capital in the government's eyes to withstand something in the future that may weaken the economy but not bring down the banks. You ultimately want strong banks that are not dependent on the government for support, and I believe we are approaching that. In fact, most of the banks are probably in their best financial shape in the last 5 years. Not that the banks are going to make tremendous amounts of money going forward because of low interest rates. Rates need to go up for banks really to make money. So while I would not be an owner of most bank stocks or financial stocks at this point, down the road, if rates actually do start to move up, which the Fed has indicated again, they're on hold until 2014. I believe it'll be longer than that. But ultimately, if it's 2014, the banks need higher interest rates in order to really increase their profits. So it's a sector, in my opinion, that is one that is very needs a lot of hand-holding, and really you need to, as an investor, make sure that you don't just jump into bank stocks because you think they're cheap, when in reality, they're not that cheap unless interest rates start to move up and they can actually make more money. I hope this video was of interest to you and you learned a little thing about today. Remember, folks, you need an investment strategy. It needs to be followed. If you don't work with a fee-only registered investment advisor, then chances are you have no strategy at all. As for clients, we're doing exactly what you pay us to do every day, which is babysit your money and make money and also control risk in down markets. If you have individuals that would like to use our service, please refer us. We always appreciate your referrals. And if you're a non-client, consider calling us for a consultation. We always like taking on new clients who are nice people who want to better their situation. Until next week and until this Sunday show, make sure you have yourself an extremely profitable week.